Okay, time for Q&A. There's a lot of them this week. I don't know if I'll get through all of them, but let's see what we get to. Would love to see a bank on the financial modeling series in time. I hope to have one in each of the sectors, in the sector studies, 11 sectors, so in time. Are you a buyer of China's broad-based market through an ETF? No, I am not. Any specific North American names you think would benefit from this? No, copper. Anything that benefits from it is already priced in. This is the thing. You really have to anticipate these things. So to say, will it benefit, you now have to ask the question, based on what is priced in, do we expect it that it's an underreaction, or was this an overreaction? So copper really shot up. Is that an underreaction or an overreaction? If you think, no, we haven't even seen the impact of the stimulus yet, meaning that it's definitely going to be taken up. The property sector will get new life. It'll reemerge. It'll start being a growth engine again. If you believe that, then yeah, there's probably more to run in the materials, meaning mining. But if you think, well, we've already had a really big jump in everything in anticipation of it, the impact, if it's, average is already priced in, it would have to be a much bigger impact than you think. So it's not a question of, hey, they're doing this, what should I buy? It's, hey, they announced this, there was a big reaction, should I still buy? I'm not. Don't you think Tesla fan base will pump the stock in their upcoming robotaxi event no matter what they show or say? Going into the event? Probably. I think it's having trouble right now at 260, 265. But this is no longer a stock based on fundamentals. It's a gambling stock. The Tesla fan base, they're not buying the stock, they're buying calls, which forces the market maker to buy the stock. This is really just a casino table at this point. It is detached from fundamentals, detached from reality in so many ways. This is going to be a massive disappointment when it's unveiled because they don't have anything. They don't have a robotaxi. They're going to show you what it would look like if they had one. If we had one, it would look like this. And if we had a platform, it would look like this. This is what it would look like. And every Tesla will be a robotaxi, except they decided that they built a special purpose vehicle for this with no steering wheel and no brakes. Well, everybody doesn't have that. So the question will then be, I thought it was just an average car. It could be a robotaxi. Now you're saying that you've built something completely different? What's the message here? It's going to be nothing. But yeah, with Tesla, you got to be careful. You don't want positions that continue to lose money. So you buy puts. Puts, all you can lose is what you paid for your puts. So no matter how high it goes, it hurts you less and less. And that's what I've done. Did you see the JPM collar trade? No. Looks like it's tail risk positioning. What are your thoughts? Call the put, a call. Okay, well, let's say there's S&P, so we're short a call. We're long a put, and we're short a put. So we have a spread. How big is the spread? Oh, that's a big spread, 845 points. Looks like the put is financed with the call and the other put. That's excuse me, that's a pretty wide spread, and that's a pretty bold statement, 60-20 on the upside. No, I haven't seen that one. From whatever life experience you have now, if you would have been in your mid-20s, these are hard to answer. Starting your career, would your goals would have been like, or how can, would have been like how, what? Would your goals would, let me read this again. And starting your career, would your goals would have been like how, oh, I get it. Would like, how can I, okay, you're speaking street. Like, how can I be rich or make as much money as possible? No. I think everybody in their 20s especially if you're educated, you think, no, it's going to be me. I'm going to be the rich one. I'll be the successful one. And I just need a job, and I'll work my way up, and I'll be really successful. I don't know that I was any different in my 20s. I don't think that I woke up every day saying, I'm going to make $1 million. The money was never, you had it in the back of your mind that you were going to be successful. You didn't quite know how you were going to be successful, but you figured it was going to be through a job somewhere. This is a conditional saying, if I knew now, like if back then, if I knew what I knew now, I can't answer that, because knowing what I know now, I already know how to make money. The market is one big giant money printing machine if you know how to use it. I probably would have just said, you know what, I know what I'm doing. Give me any job that gets me capital flowing. I'll build it from there. But that's hypothetical. You cannot do that, nor can you. You can't give advice to a 25-year-old that relies on a lifetime of experience. You can't do that, right? Otherwise, you'll never get the lifetime of experience unless you go through the same steps and make the same mistakes that somebody with a lifetime of experience has. That's how you get a lifetime of experience. You once said not to read trading books as a strategy would not work. But can we read them to know what kind of thought process or logic they've applied? If they share it with you, sure. Would that be helpful? To the degree that they tell you what their thought process is, sure. Most don't. Most just tell you, I did this and this is how this worked, and they tell you the trade setup or how to do it, but it no longer works anymore. If something is working and I'm making money off it, why am I wasting time writing a book and putting up a website and teaching a class to tell you how to do it? Unless it's process. And if I'm telling you, oh, this is so easy to make money, you can make a ton of money overnight. It's so easy. You follow my 3 simple steps. Anybody who says that to you is lying. This is a brutally difficult game to play. Brutally difficult game to play and win consistently. It's not easy. It's not easy. And anybody telling you that it is, that they have a system, that their system is flashing buy signals on these 5 stocks, that's just a con. It's just a con, and you're the trade. You are the trade. If you want to, many of you probably have already heard of this guy, CoffeeZilla. This is his channel. He's really good. His channel does nothing but expose these people who tell you, oh, you're going to make this, you're going to make that, you're going to do this, you're going to do that. He does deep dives on these people, and he exposes them for the frauds they are. But if you want to watch some good entertaining stuff and see him take down just these people online, he did a nice one on Tai Lopez a while back. You remember Tai Lopez? Here in my garage, my Lamborghini. But what I'm most proud of are all the books I read. And, that guy. He did a nice takedown of him. But I do recommend his channel. He's really entertaining and really good at what he does. Have you ever done trades based on gut feeling? Well, I'm sure I have. That's the whole. I don't call it gut feeling. It's intuition. It's, sometimes people say, I got a feeling about this. It's more like intuition. I wouldn't call it gut feeling, but I get what you're saying. Were you successful? I don't know. I can't remember any one trade, but my portfolio value goes up every year. So overall, I'm successful. I do rely on experience and intuition and research, but intuition is in there. So I think it's an input to the decision-making process that must be successful. But have I ever just looked at something and on a gut feel bought a whole bunch and I was right? I don't know. I wouldn't normally just do that on a gut feel. Have I? At some point, I'm sure I have. I can't remember. I guess the message to take away from that is that it is not a significant part of my process just to rely on gut feel. Otherwise, I'd remember something. It would be more memorable, right? I'm interested in entrepreneurship, but whenever I try to think of what problem I can solve, it feels like all problems are solved. Well, all problems that you know of. If all problems are solved, you must have a wonderful life with no problems. All your friends must have wonderful lives with no problems. Your family must have wonderful lives with no problem. You must live in a city where nobody has a problem and it's like Eden. You must live in a country with no problems, in a world with no problems. Clearly there are problems. There's no end to the amount of problems in the world. So your universe is too small. Your limited world, you might not see the problems there. Now, some problems are too small to solve. Some problems are not worth solving. And if you're not seeing enough problems, it's because you haven't learned enough about other things, right? So if you know nothing about the construction industry, how would you know what problems construction workers face or construction jobs face? You wouldn't know because you know nothing about it, right? So it just could be that you don't know enough about things yet to know where the problems are. But I can assure you there's no end to the amount of problems that exist. There is no end to the problems. Thoughts on Stellantis earnings and what it means for other OEMs. Cox Automotive had their presentation. I don't know if you get notifications for this, and that I guess from mid-September onwards, the tone in the auto industry really shifted. Things just dropped off kind of mid-September downwards. Stellantis, I think, might be unique, especially Chrysler. That might be unique because Chrysler sucks. Let's just say it. Chrysler sucks. I lived in Windsor for 20 years. Big Chrysler town, big union town. And the union workers from Chrysler take pride. They take pride in how little work they do and how often on shift they'll go out to the park across the road and they'll smoke joints or smoke marijuana or whatever. Or they go to a bar and they'll play pool and they'll drink and they'll go back to they take pride in how absolutely lazy they are. It's a thing of pride, of who's done the least amount of work and who's got a story about how little they did. There's a sort of saying in Windsor, don't buy a minivan made on a Monday. When they were making the minivan there, I don't know if they're still making it there, but don't buy a minivan made on Monday. They took pride in that. That was a thing. They took pride in the shitty quality and the shitty work that they did. So for Chrysler, yeah, nobody wants it. Mercedes didn't want it when they merged. They said, get rid of this thing. Gave it to a private equity firm, Cerberus. And the guy who sort of ran Home Depot into the ground, they put him in charge, and they didn't want that. They lost a lot of money on that, gave it to Fiat. Nobody wants this thing. Nobody wants it. It's because of the culture, that union culture of who can do the least amount of work. Now I can say that because, I hate unions, so I get to say that. Tried using the yen as a funding currency to finance S&P 500 ETF denominated in yen. No, you can't really do that. The objective being to have the obvious S&P 500 long exposure, short yen. You're not going to do that unless you're an institution and you're borrowing yen directly from a source, not through a broker, but directly from a source. All while minimizing my 4S risk. The issue is that these ETFs have 100% margin. It's not that they have 100% margin, it's just you cannot use the proceeds from a currency trade with your broker to buy anything more than a currency, which means a cash equivalent. So you can't really use it for that. As I need my margin for loan purposes, I can't use synthetics. Any ideas I haven't considered to make this happen? You can only buy T-bills. You can only buy something that looks like money. So you can do that through your broker, but those funds are restricted. You can't just spend them the way you want, but you can put them in cash or cash equivalents, and 1 month T-bills, 3 month T-bills, these are considered cash equivalents. You'll pay the yen rate, which your broker will, increase by 150 to 200 basis points, but you'll get the T-bill rate. And since you're using leverage, it'll be an all right return. You can get that done through a broker. Typically, what you'd like to do is get it done through an institution, but you'd have to be an institution as well. A currency swap can get that done, or borrowing directly can get that done. But you got to be big enough to get that done. You sometimes refer to your childhood upbringing as, let's say, less than optimal from a family point of view. Well, if you take the family unit as a benchmark, then yeah, I underperform the benchmark. I mean, you could say that if you say, well, having a mother and a father in the household would be the benchmark, then I underperform the benchmark. But when I was young, I didn't see it as being a suboptimal. I saw it as coming with an incredible amount of freedom that people who had parents didn't have. I felt like I was the lucky one. Not that I was shortchanged on anything. Only later in life do you realize that, well, if there was somebody around that could have, given me some advice along the way, maybe I didn't have to learn all these mistakes on my own, right? Do you think that these situations may sometimes be a blessing in disguise by forcing resilience and perseverance? Yeah, that's exactly it. I think that's what, made me a little bit more resilient later when faced with adversity. I didn't break down. You dealt with it. Yeah, I think that does have that outcome. If you don't go the wrong way, right? What do you think about the thesis of Permian Basin turning into a hub for AI data centers, as you have plenty of energy, land, and water to cool it? Texas? Well, I think Texas would be business friendly, lower taxes. I don't know that you need to be, well, first of all, taking oil out of the ground. Oil is not energy. You can't really use it. You have to convert it into something to become energy, but there's plenty of natural gas there. But you'd need some way of converting that natural gas to energy, which means you need some kind of energy, creation and distribution facility. You need something there. So I don't know. It's like saying, well, what if I set up my jewelry store right beside the gold mine? That's where the gold comes out. Yeah, but not in jewelry form. That's where the oil comes out. Yeah, but not in, that's crude oil. It has to be refined, right? So, I don't know about that. That doesn't seem logical to me, unless you're going to put, a bunch of energy distribution infrastructure in place. But you have to turn natural gas into electrons, right? To get the electricity out of it. New wave of divorces and breakups incoming from a wave of mischaracterizing. Yeah. Why does the theta of my portfolio change with the change of the underlying price? Because theta is the decay of the time value. So let's say, here's a good example of where theta would decrease. Let's say that you have a stock and it's at $50 and you sell a put at 50. Well, that's at the money, so all the premium is time value, and it'll decay at some rate called theta, and the stock price moves down. Well, the time value component gets smaller and smaller. So theta only is the decay of the time value, because intrinsic value doesn't decay, it's intrinsic. So your theta would begin to drop as the stock price moves down, because it's a smaller and smaller component of the premium. Same if the price moves up. If the price moves up, the premiums will shrink. The premium will be very small. There's not much, it's not going to decay any faster. I mean, if you're still 50 days from expiration with a small amount of premium left, it's the theta will be really, really small. So theta does change. I sold 10-day option for 100. Would my theta not be 10? No, because the premium, the biggest effect on premium is delta. That's the biggest effect on premium is delta. And theta decays fastest usually in the last few days. That let's say that this is expiration here, and let's say that this is 30 days away. Theta decays like this. And when you get to about 2 or 3 days, it really starts to decay until expiration. It decays really quick 3 days out, and then there's not much theta left after that, so it tends to decay slower, and then you get to zero. But delta will take away a lot of the premium. So when we think theta decay, that does not mean 100% of your premium decays with theta. Again, let's take this stock over here where you sold a put for 50 and the stock just goes right up. Well, the delta on this will take the premium down. Let's say you got $2 when you sold it and it jumps $10, there might be 20 cents left. Right? So the delta brought the premium from $2 down to 20. Theta didn't do that. Theta will then start to decay the rest of whatever's left over, but delta is your biggest move on any option price. Delta will have the greatest effect. When you are invested in different currencies, how do you take profit and manage the FX risk? I don't know that I have a particular answer for that. That would imply that I have a process for currencies, which I don't. There is no process. At least, I think that they're random, and I use them, opportunistically. But at any given moment, I don't know. I don't know where it's going to go because it is random. I just think that over time it'll drift to a specific point. And when do I take profit? I don't know. Sometimes I don't really let it go very far before I say, no, you know what, I've changed my mind, I'm out. Sometimes I just forget about it for a while. If your domestic currency is euro and your profit is made in US, do you let your US invested and take your profits in euro by not investing more euro? I don't understand that. Do you let your profit is made in US, do you let your USD invested and take your profits in euro by not I don't understand that. And avoid FX conversions. You mean if I make US dollars and I have US dollars in my account, do I just leave it in US dollars? I do. I leave it in the currency until I feel I need it or that I no longer want that other currency, but I tend to leave it in the currency. But that's just, that's for no other reason than, I kind of like different currency balances in case I want to do something in those currencies. And all the other currencies I made other than my domestic, I printed. I never convert, or very rarely do I convert. Like, let's say I want Mexican pesos. I will trade the currency to generate my own pesos. I won't convert. So in my mind, those pesos were free, right? So I sort of just leave them there in case I want to buy something that is denominated in pesos. If the U.S. debt is going to increase to an unsustainable level, what does it mean for TLT in the future? Well, it's not just the U.S. debt is going to increase. All debt is going to increase everywhere. Governments have become a bigger and bigger part of their economies to the point where they can't really back out now because every governing party in a democracy says, well, if I institute austerity because it's a good thing, I'll never get reelected. So I gotta keep spending. And then it becomes a bigger part of the economy and it just keeps on going. So it's not just the US, it's going to be every country. And if it's going to be every country, you can't ask what it means on an absolute basis. You have to ask, what does it mean on a relative basis? On a relative basis, the US will still look like the safe place to be. Look what happened today. Iran threatens ballistic missiles on Israel early, and money ran into US treasuries. because no one cared at that point that the U.S. deficit and debt was on an unsustainable path. No one cared. It's just, I need safety, and the U.S. dollar is the safest place to be. Most of your content goes far beyond the investment in CFA. It is mentorship. Would you mind storytelling? Would you mind storytelling? You're the key part of your life, so we can better benefit from your life experience. I think if you talk to anybody who's lived a good life, if you talk to anyone who's lived an interesting life, I think you'll find the same, let's call it wisdom, because that's what you get when you get older, is you get wisdom of the ages, or of age, right? And it, for somebody in their 20s, it may sound like you've got it all figured out, but you're just, getting the benefit of wisdom, of somebody's life experience, an interesting life. I think if you talk to anybody, even your own mother and father who have lived interesting lives, I think that if you really listened, because you get so used to saying, "Oh, Dad, leave me alone," all this, because your dad's saying, always giving you advice, but listen to it. I mean, really listen to it, and you might say, you know what? There's really something here. I don't know, maybe not, but maybe you need to hear it from a different voice instead of the same voices you've heard it from for so long. I don't think that I have a unique perspective. Maybe I have a different ability with words, and I can say things that other people have in their heads, and I might be able to say it in a way that other people said, yeah, that's exactly what I was thinking. But I don't know that I have any unique life experience in that sense. I'm not sure I do. Yeah, I don't think that, I will say that, I don't think that if you took a whole bunch of people my age and you talked to each of them, you'd probably say, they all seem to be in and around the same neighborhood. Is it possible to have your live sessions and Market Outlook Q&A uploaded in the app for offline watching? In time, that is the next move. That I've been doing the Market Outlook on YouTube for a very long time, and it will move to the site at some point. I don't know when, but it is part of the plan to bring it all into an ecosystem. XLU currently has the highest put call interest of all of the sectors. Do you see this as a bear sentiment for XLU? As sentiment, I don't know if I would see that as sentiment, because every put that's bought is also sold. So we could say that, well, there's a whole bunch of puts that are bought. The other way of saying that is, well, there's a whole bunch of puts that are sold, because you can't buy a put without somebody selling a put. It's a contract between two people. So at any different point, I can look at that and say, there's a lot of people comfortable selling puts. There's a lot of people who want to buy puts. Well, there's a market, right? There's a market. That there'd be fewer calls being bought makes a lot of sense, because interest rates are high and calls are priced out on the forward curve, and XLU is not a momentum play. It's not an NVIDIA or a Tesla where in one day you can double the money on your calls. It doesn't work that way with XLU. So it wouldn't surprise me that you got a lot of people that are selling puts, and maybe the buyer of the put is the market maker. And when they buy the put, they have negative delta, so they got to buy XLU to hedge. And that could explain, the nice move in XLU over the past 3-4 months, from $70 all the way up to, what are we at, 82 now? So looking at these put call ratios, sometimes it's a matter of, thinking it through a little bit. Well, who was the buyer of the put? Somebody had to sell it to him. No, I don't see it as anything that would change my mind. Still can't get my head around real estate and real rates and break-even rates. but I scrolled the last week outlook twice after watching it to find if I had missed FF term stroke. Yeah, okay, all right. So I'm still confused with long end yields didn't like 50 basis points cut. As I was and still am confused with the long end yields didn't like 50 the long end yields didn't like 50 basis points cut and shoot up. Okay, I'm not quite sure how I'm reading that. I don't know where the stress is. Is it due to inflation expectations? No, just the cut is the overnight rate, not the 10-year rate, not the 20-year, not the 30-year, it's the overnight rate. The short end of the curve, the yields or the rates are far more volatile than the long end of the curve. But for pricing, the long end of the curve is far more volatile than the short end of the curve. Why do put spreads become cheaper and call spreads more expensive when skew increases? Shouldn't the higher skew result in higher premiums for puts? It does, but think it through. You're talking about a spread, right? Not just one. So let's say that you have, I'm going to try to do this the best I can. Let's say that you have constant implied volatility across, this is at the money, let's say. Here are calls and here are puts. And let's say you have constant, and we'll make a zero interest rate to make my point here, constant implied volatility across all of them, and this was price. You'd have something that looks like this on the calls, and you'd have something like this that look on the puts, which means if you go 10% below the price and 10% above the price, the call and the put would have the same price. Add 0% interest if they both had the same implied volatility. That would imply that the term structure, that skew, not the term structure, but skew was flat. But skew usually is downward sloping. In times of stress, the implied volatility on puts increases. So what happens is you get this going on puts, and you get this going on calls. So let's buy a call spread from here and here. You pay this price, and you'll get this price. Look at the spread between it. Let's do the same here and here. Since they're elevated, look at the spread. The spread becomes cheaper on the puts than it does on the call because all the premiums tend to increase. Notice that as you go further in the money, the implied volatility is increasing, making each option below it, I wouldn't say more expensive. It will be cheaper because it's further away from where the underlying price is, but the time value component becomes more expensive for whatever time value is left. So it ends up being that the spread ends up being cheaper on this side than on this side, right, for the puts versus the calls. What is your opinion on master limited partnerships as an investment vehicle? Never used them. AMLP gives exposure to energy infrastructure, 7% dividend yield. I hear their tax structure adds some extra layer of complexity, but I didn't fully understand how. Neither do I. When it gets to master limited partnerships, it is a partnership, so it's a flow-through entity. So all the gains and losses flow through to you in the form that they're made. I don't think that I've ever invested in one. I've never spent any time with them at all. So I don't know. Applied level subscriber, watch a lot of videos. Can't thank you enough for helping me making money. Well, you're making the money on your own. I'm just providing you with some education that you are then turning into money. Question about the video, two big rules for very beginner level retail investor. When you say 10-20 delta theta portfolio, does that mean I can fully invest my portfolio and then run the theta portfolio? No, you're still going to need margin. I see my portfolio of 30K has dollar delta beta 55 due to leverage used for selling options. Isn't that too risky for someone with very low risk tolerance? Yeah, Yeah, I would say it is. I'd say you'd want to bring that down. You got 30,000, right? Multiply that by 0.001 and look at your theta and make sure your theta is less than or equal to that number, and that's the right sizing. For a beginner, that's the right sizing. I have 50 Freeport. When I saw a sudden bump in its price in the day when China announced stimulus, I sold 53 call thinking that was an overreaction. Yeah, no, I don't think that was flawed, but you only have 50 shares. You sold a call, so you're naked 50 shares on that call, right? I want to be sure I have the right mindset. I think the reaction is there. I think we would need to see start to see. Here's what you want to watch. Google Shanghai copper inventories, because that's where the copper inventories are held at the Shanghai Exchange. And watch for the copper inventory starting to drop. If you see copper inventory starting to drop, then you might want to cover that 53 call, because that would give a boost to copper prices. But Shanghai inventories are very high right now. If in the next month or so you don't see those inventories dropping at all, that means that there's the announcement of stimulus and then there's the actual take-up of the stimulus. It means the take-up isn't really going on. And the price will fall back down to the low $4 if we don't see inventories dropping. You might ignore this philosophical question. My 9-year-old son sometimes asks me, Dad, what is the point of having $1 million if you don't like buying fancy stuff? How would you answer that? You would say, you're only 9. You'll understand when you get older. If you bought fancy stuff, you wouldn't have $1 million anymore. And fancy stuff eventually depreciates to zero. So you could just tell them the goal of money is to buy assets that appreciate, like your future education. Would you like me to spend this money now on things that will be worthless in 5 years, or would you like me to keep this money for your future education? And tell him to think long and hard about it, because if he says spend it now, say, okay, well, you're on your own for your education, and then hold him to it. Let him know he's on his own. If he says, well, where's my fancy stuff? Say, well, you go get your own $1 million. When you get your own $1 million, you go buy your fancy stuff, and I'll buy my fancy stuff. It's just my fancy stuff is not what you would think is fancy. But just ask him what he'd rather prefer. An education that appreciates, or fancy stuff today that depreciates, right? You rent depreciating assets, you buy appreciating assets. That's how I would say it. I've been asked this before too, is like, what's the point of having all this money if you work all day long? And I would say, this is when I was building my business, I'd say, the moment I stop working all day long and enjoying my success is the beginning of the end of my success. I am successful because I do this. You build yourself a gilded cage, but it is a cage nonetheless, but you are in a gold-plated prison when you're building a business. Yes, you are successful. Yes, you have money, but the moment you start enjoying it is the moment you start wearing it down and you start losing it. It's the good life. When I say the good life, I mean, the driving around in supercars and flying around the world in jets and living in big houses. That's for lottery winners or scam artists. But people who actually are building value every day, there's no time for that. There's no time for that. And other things become more important. You realize how flimsy stuff is in life. You realize how empty it all is. It doesn't bring you happiness. Somebody who has meaning in their life, the money doesn't buy you happiness at all. Like buying stuff is it's the last thing on your mind of buying stuff. In fact, you can't even understand why you would want to buy stuff. Like I don't know. There's just so much more you can do than buying stuff. I want you to think about this for a moment. What was the first vacation you went on? Can you remember it? What was the first girl you kissed? Or first, if you're a girl, the first guy you kissed? What was the first, movie you saw in a movie theater? I bet you can remember all those things. What was the first pair of shoes you had? The second pair of shoes you had? You could probably remember every vacation you've been on and where you've been. I want you to remember all the pairs of shoes you've had. I want you to remember all the pairs of jeans you've had. And I'm sure you bought $150, $200, $300 pairs of jeans, but try to remember them all. Do you still have most of them? I bet you, especially if you're 40, I'll bet you that 90% of the things you owned in life you no longer have. Since you were a kid, all the toys, the bikes, the shoes, the shirts, the hats, the collections, the comic books, the albums, the CDs, the movie. I bet you 90% of that stuff you no longer own anymore, nor do you own the money anymore. But you remember all the experiences you had in life. Think about that. All that stuff you buy, all that fancy stuff you buy disappears. It all goes away. It ends up in the landfill. It all goes away, but not the experiences you have in life. That stays with you forever. Get that. In this video, you said that we live in a deflationary system due to technology. Yep. It seems like the government's need, hunger to finance grows more and more, mostly via deficit spending, debt issuing, debt monetization, currency devaluation, similar inflationary methods. We call it inflationary methods, but have they been? Japan's been trying to get inflation for the longest time. 2011 went on a massive money printing spree, no inflation. Deficits as far as the eye can see from both Canada and the U.S. since the great financial crisis. Heck, in the U.S. since the wars, since George Bush's time, no inflation. All through 2012, 13, 14, 15, 16, 17, 18, no inflation. And you had massive growth in the money supply in the U.S. Where was inflation? It wasn't anywhere. So, no, I don't think. The only reason we have inflation is because we had a global shutdown and we had supply problems. And we tend to remember that. It's more salient in our mind that, inflation is very sensitive. It's going to come right back. No, it's not. No, it's not. I mean, that's me talking. I firmly believe that. The problem is that government financing is ultimately a political problem. Politicians must bribe the public to win office, pretty much, not an economic or technological problem. Therefore, even as we have become much wealthier and efficient as a society through technological advances, our debt to GDP and deficit to GDP keep growing. Well, not necessarily. Well, I mean, sure, all of that keeps growing, but that doesn't mean that spending is going to be inflationary. You have entitlements where the government says to this person, here's some money, and this person goes and spends money. But that money was taken from somebody else who doesn't get to spend it, right? So I have money. The government sells a bond. I buy the bond. The government takes my money, gives it to these people. These people go spend it. Well, it's not me spending it. Now it's somebody else spending it, right? So, no, I don't. When they go to spend it, they're spending it in the same economy, the same deflationary, technologically deflationary backdrop that I would be spending it in. So, no, I don't. I don't agree with. That money printing is going to cause inflation in advanced nations, in Western-style nations, maybe in second and third world type nations, but certainly not in advanced nations. Just like in the post-World War II era. Well, careful with that one. That was characterized by a bunch of shortages, right? Chances are this will ultimately end up in an inflationary bust, where bonds and currency will be sacrificed in order to save the government from defaulting. I wouldn't look for a repeat of that. Not in today's world. In post-World War II, you didn't have the concept of increasing returns to scale. You had diminishing returns to scale. You lived in a world of scarcity after World War II. Because we didn't have a digital world. You had a very physical world where manufacturing made up, I think, like 60-70% of the economy. The services economy was very small. Fast forward to today. In 1948, if you wanted to buy, let's just say Patsy Cline, I don't know, was Patsy Cline around back then? But you wanted to buy a Patsy Cline album, it depended on the availability of the album in the record store. Let's say you want to buy, I don't know, something from Godsmack or Disturbed. Does it depend on the availability of vinyl package in the record store? It's bits and bytes. There is no supply limit on music. There is no supply limit on movies. There is no supply limit on social interaction. There is no supply limit on dating anymore, because you don't have to go stand in line at a nightclub. There's so many parts of society today where there are just really no supply limits. And some companies, the bigger they get, the lower their costs get. That's called increasing returns to scale. That is a new thing. So that's the problem with cherry picking from history, is history did not have the sheer quantity of bits and bytes that we have today. Concerned we may be missing a risk factor with the long U.S. bond. Okay. Could you play devil's advocate intellectually against the case for duration? Hard for me to do that, because I'm all in for duration. I firmly believe that the Fed will have no choice but to lower rates. I don't believe in higher rates, but my observations below it is quite long. Feel free to skip. Apart from your point, the Fed could change the target price stability rate to the range of 1 to 3, which ironically I agree with you, would be interpreted as inflationary signal by the market, despite the fact that the lower end of the range is half of the target now. Well, there is expectations, and then there is reality, right? So reality, we'll call that the fundamentals. So the central bank says, well, let's go to 1 to 3%. There's an expectation that there'll be elevated inflation, but will there be? Right? Just because the expectation is there doesn't necessarily mean it will be that way. You may have some job seekers and unions and companies pricing that in, but once it's priced in, it might be a 1 period bump to inflation, but once that's priced in, if the expectation is 1 to 3 and we're coming in at the expectation, what does it matter? It still has to turn into inflation in the real world. It still has to actually show up in the real world. And if we think the real world will become more and more digital, it is less and less likely that it will show up in the real world. But you want me to play devil's advocate. The bond market will somehow discipline the government through lower credit rating. Okay. Recency bias, whereby the core argument is that the U.S. interest rate used to be higher, therefore we should expect mean reversion. I don't know how to play devil's advocate on this stuff, because I don't believe any of it. I mean, it would be like me trying to convince you there's a God. I don't know what I would say, because I thoroughly don't believe that there is. I'm an atheist. I couldn't play devil's advocate on that one, because I wouldn't believe a word I was saying. I'd just be making stuff up to make the case. I simply can't. To be brief in my rebuttal is, what is the alternative? Well, there you go. Simply cherry picking the period of recency. What about 2010, 2019 were deflationary concerns? Yep. Also, naive comparative analysis ignores the impact of technology and demographics. Exactly. Yeah, I'm. That's where I am. So let's just say I go out 2 years and I'm wrong. Why would I have been wrong? What could have happened that made me wrong? Is it that you had another supply channel hit somewhere, that the Middle East spilled over to something bigger, and 30% of the world's oil supply wasn't getting anywhere anymore. The oil fields are on fire, missiles are everywhere. The port strike carried on for way too long. We're now in month 3 of it. Nothing is coming in or getting out of the country. 50% of imports gone. The Fed, well, see, that's the thing, right? There's where I can't go any further, is that you would say, well, all of that would be inflationary, but it would also crush the economy. So the Fed would have to lower rates, thereby duration winning. You'd have to have that happen and it not crush the economy at the same time. I can't get there. I mean, unless you had another situation where the government decided to give trillions of dollars away to people at $2,000 a month so that they could just go spend money on stuff that doesn't exist. That's why you had inflation. But unless you have another pandemic and global shutdown and another repeat of that, I can't get there. Yeah, I can't get there. What are your thoughts on Magna in comparison to Borg Warner? I have not spent any time with Magna. Just seems to be so much family drama in there. They've had quite a down year, lowered guidance due to macro, partially due to Fisker's bankruptcy. Yeah, I know nothing about Magna. I think I can skip this. Sentinel-1 as a smaller cybersecurity competitor for review. I'm leaning to Palo Alto Networks. Wouldn't a yen trade be in intra-market? And yen peso trade be intermarket? Yeah. Did I say it differently? Also, can you explain the mechanics of short yen, long yen carry trade? Well, you borrow for 1 day and you invest in long-term bonds. If you have an upward sloping yield curve, you're borrowing at this rate, you're investing at this rate. As long as, if you think that rates here are going up, rates here will go up. Right, so you'll get duration and you'll get a yield spread between them. If short rates go up, then long rates will go up as well. Yep. And long-term bond prices would go down. So if you borrowed yen and then you bought long-term bonds, wouldn't you lose money when rates increase? Well, you would, but you don't lose on a bond if you hold it to maturity, right? So as long as you're willing to keep holding it, you're going to do okay. This is the problem with repos, right? Is when you place a bond for repo, if rates increase, the value of your collateral is dropped. You're sometimes asked to post more collateral. So you would, if you were doing an intermarket carry trade, I don't know that you'd go out to the 30, but you might go to, let's say, the 2-year, something along that lines. Here's a tough pickle. A while back, right before gold went bananas, I sold some deep out of the money naked calls on gold miners, GDX. I know selling naked calls was dumb and I learned my lesson. Problem is that after the massive gold run the last 30 days, GDX has climbed into my strike level. Still plenty of time to expiration, volatile spikes, so closing out the short calls is expensive. I don't see any short-term catalyst for gold to turn around anytime soon, so I got to risk manage this trade before calls go deep in the money. How would you do this? Buy the underlying. Just start buying shares of the underlying. What's your delta? Your delta is 0.5. So if you have one call and your delta is 0.5, buy 50 shares. Just buy 50 shares of the underlying. Now you're delta neutral. If it's going to be called away from you, you may as well own it. Right? That's all. You've sold a call. You're naked. So get dressed. Buy the underlying. That's how I would do it. Got a question regarding TLT. More directly, duration versus what the market has already priced in. Right now, the 20-30-year Treasury yields are around 4.10. Yeah. That is what the market is pricing in terms of Fed funds. Inflation expected term premium, since those are the three parameters that move to the long end of the curve. TLT is duration of 16.5, yeah, meaning its price is 16 for 1% change in its portfolio yield, yeah. Does that mean in order for TLT to move 16% along end of the curve, would need to move by 1% more than what the market is pricing in already? No. TLT is not a stock. TLT does not have an income statement and a balance sheet. TLT is a portfolio of bonds. It's the 20 plus, and its average maturity is 25 and a half years. So whatever bonds are being held have a price, and there's a weighting, and it's the weighting times the price, and that's TLT. TLT is not pricing in anything. Bonds are pricing in things, and TLT is just the value of the bonds. Bonds are pricing in something. So the proper question is, are bonds pricing in too much? Not is TLT pricing in too much, because TLT is just the net asset value of the bonds it holds. TLT has no expectation in it at all. The expectation is all within the bonds that it is holding. So whatever portfolio it has, if yields dropped 1%, then yes, it would increase. It's not as if TLT is pricing in something different than what the bonds are pricing in. It is the bonds. It's nothing more than the portfolio of the bonds. It's an ETF, and it will hug very closely to its net asset value. Last Q&A asked if for CFA I should first watch videos, then notes, then question bank. But the main aim of my question was that what will be more effective way to learn the stuffs according to you? Yeah, I don't know how to answer this question because I'm not you. If you say, well, what's the most effective way to work out my bicep according to you? I would say, well, this is the way I do it, but I don't see everyone doing it the same way I do it, and I see other people with biceps just as good, if not better. That does not mean that I have the best way. It's just that I found a way that works particularly well for me. Your body may be different. You have some university career behind you. You have some A's behind you. What made you successful in getting those A's? It may be different from what made me successful. You might not want to do what I like to do, which is a very slow reading of the reading. I read it fast. And maybe if there's video, I'll watch video. Then I go back to the reading. I always go back and I read it very slowly, line by line. I look up at the ceiling. I reflect on it. I put it in my head. I draw pictures in my head. I think it through. I bring it to the real world. I say, how does this? You don't want to go through what I go through. Probably not, right? So I can't answer that question for you. Only you can answer that question. All I can say is what has made you successful in the past is what you should do. Think about all the times you got A's and the work that you put in or how you did it. Do that. Do that. This is no different. Do that. And that is different for everyone. So I still can't answer that. Can answering every or almost all questions like you do can be a metric to know that you are an expert or have mastery in a subject? Well, if you listen to my Q&As, there's lots of times where I go, I don't know anything about this. I know what I know, and I know what I don't know, and I don't really try to come up with things about stuff I don't know. For two, I'm going to say yeah, I guess. I mean, I don't know that that's a debatable or an essay answer. So being an expert is not like a specific point you reach, but ongoing. Yeah, that's exactly it. Being an expert is an ongoing thing. It's an ongoing thing. What is personal finance for you, and how can we learn it? Personal finance for me? I don't understand that question. What is personal finance for me? You mean like how I manage my money? Like pay my bills, my things like that? How can we, I don't know what number 4 is asking. I'll pass on that one. Springer Nature filing IPO, publish their perspective along with 3 years of financial statements. Would you consider doing a video on reading the perspectives of the potential investment target? What would you do though? Can you get in on the IPO? And when I say in on the IPO, when it hits and starts trading, you're not in on the IPO, you're buying after the IPO. The pop is over. I mean, the big gain is over, right? So are you thinking about it in terms of should you buy it after it starts trading on the market? I don't know that I would be good at doing that, because on IPO day there's a lot more going on than the fundamentals. There's a lot more going on that I guess my solid advice would be to avoid IPOs, because I don't know that I would do that. Yeah, I don't know that I would do that. Any thoughts on U.S. Steel? I've watch listed and might start an allocation, as I think the Nippon deal has a chance of going through regardless of all the talk by Trump-Harris. Yeah, it could be a lot of campaign talk right now. It's not like, and I think that if you even talk to the workers at U.S. Steel, they'd probably be saying, look, if we want to keep our jobs, this thing has to go through. I don't know what these guys are talking about. It's not like upon buying U.S. Steel moves the jobs out of the U.S., right? Most likely not. I think that could easily be written into the deal to get it through. I guess maybe some words on that could be written into the deal, but I think it's just a lot of patriotic bullshit talk from people who think it's going to get them votes from, Pennsylvania's a key state. They've been called the Rust Belt for how long now? Ohio through to Pennsylvania, called the Rust Belt just because so many manufacturing jobs have left. Factories have rusted over, right? And I think even from the 80s, late 70s, early 80s, the steel industry has been under pressure from globalization. You can even go back to the 80s. It even found its way into popular music. I don't know if you are a fan of Billy Joel at all, but he did sing a song called Allentown, right? It was about Bethlehem Steel. Out in Bethlehem, they're killing time, filling out forms, standing in line, and they're shutting all the factories down. You might want to Google that one. That's been going on for a long time. I don't see an issue with this. I think I think there might be a heavy dose of campaign rhetoric here, trying to get votes, making it seem like it's patriotic. No way, it's called U.S. Steel. You're not getting U.S. Steel. USA, USA. I mean, if it were called, Riverside Steel, maybe they wouldn't care, but U.S. Steel, come on, Participating in the London Stock Exchange Group competition, I need to construct and manage a portfolio for a period of 50 days. Equities only. Short selling isn't allowed. What advice would you give? 50 days. 50 days. I'm going to tell you, these kind of competitions where it's like, 30 days or 50 days, there's a heavy dose of luck involved in this. I would recommend your best bet is to lean into momentum. Find a momentum factor and lean into momentum, because that's usually what wins. Usually, when I see these competitions, you look at what wins, and it's usually a portfolio of really high beta stocks. More commonly, very rarely does a value portfolio win these things, because value takes years to play out, but it does win in the long run more than growth does, but not in the short term. These kind of limited time period things, you're really looking for momentum. So, in the weeks leading up to the beginning of this, watch the 52-week high list and just start taking names off the 52-week high list. It's usually when stocks hit 52-week highs, they continue to hit 52-week highs. Look at the S&P. How many all-time highs have we had this year? 40, 30, 40 all-time highs? It just keeps hitting 52-week high after 52-week high. That's momentum. These things usually are a result of a team that leans heavily into momentum. You're not going to win it with value plays. Palo Alto Networks, yes. Akamai appears not to compete as directly, so their analysis may provide more industry breadth. Fortinet, Zscaler, CrowdStrike. CrowdStrike seems like an interesting one. Palo Alto Networks just turned profitable. I think in the last 10K I had was for 23. They haven't had their 24s yet. It's not till the end of October. But the 23s, they were profitable in 23, but not before that. CrowdStrike still not profitable, but they have really narrowed their loss quite a bit. I think there's a lot of activity and a lot of need going forward, but there's a lot of players, and this stuff is priced in. This stuff is not cheap at all. Like it's priced in there. This is not a value play at all. I'm not going to find an AT&T here at all. I'm not going to find a GM here at all. You are going to find companies that have, I think, a growing industry and a good product, but you're going to bloody well pay for it. You are going to pay for it. So I don't know that other than learning something about the threat landscape and all the different points of vulnerability and what zero trust networks are, it'll help you understand your bank a little better with why do they always send me a bloody text and then a code and I got to enter a code. You'll understand why, because they don't trust your device. They don't trust anything. That's a zero trust network. It'll give you a great understanding of all of these things. But when it comes time to invest, you're going to say, this stuff is not cheap. No, it is not. No, none of it is cheap. None of it is cheap. And I think CrowdStrike still has some big legal settlements ahead of it. So that might be interesting to look at. They've removed some of the rigor from CFA curriculum. Wondering if you're referring to the entire curriculum? Yes, I am. Level 1, yeah. If so, have level 2 and level 3 largely remain the same? The rigor so much hasn't disappeared out of level 2. Level 1, a lot of rigor is gone. Level 2, yeah, some of it, especially when you get to the corporate issuers was rewritten, and I feel it's like, this is almost just like a memorization thing now. Yeah, I think there is some rigor that's disappeared from there. I would have gone the other way and leaned into it. And if level 2 and 3 aren't as rigorous, does your free 2018 content cover that rigor? Not really. The content is drifted very far from 2018. 2018 is great if you say, I want to know the stuff, I just don't want to write the exam. Well, great. 2018 is fantastic, but if you say I want to write the exam, I would not rely on 2018. I know you mentioned a Q bank for the applied level as well. I was wondering how high up on the to-do list this was in your plans. It is getting higher, especially for the financial modeling, because I do want two things out of that. By the time we get to the spring, we'll have done the valuation part, and I want there to be two certificates. One, a certificate of completion, which is easy. I'm not giving you any of the spreadsheets. You're creating the spreadsheets yourself, so once you're done, email me the spreadsheet. I'll see it. The other is a certificate of mastery, which means that there would have to be some exam, but here's the deal with that. I can't give you the exam. So let's say that, I have the applied level, and here is you. And I say, well, here's the exam. You write the exam, and I say, okay, well, you pass or you fail. I can't do that because what if you fail, right? Well, because I'm the one giving it, then it'll be an accusation of you're in this for the money. You're just failing me for the money, which means I would have to pass everyone, which means what value does this have? Whenever you have an exam, you have to give it to a third party. You have to give it to a third party. They administer the exam, which means that you have nothing to do with the pass or fail at that point. You have nothing to do with it. It's an independent third body. None of that stuff's cheap. That's why all of these exams and all of these, like the serious designations, CFA, CAIA, FRM, all of these, this is why it's expensive. It's not the institution that's hosting it doesn't get all that money. They have to pay a third party to host the exam. They can't do it themselves. They have to. They pay a third party. For it to have validity, all right, which is a big thing in testing, is you have to have it looked at by a third party, or a good audit trail from outside. So when you get to a certificate of mastery, it's like, well, how much is it going to cost? Because, if it gets to be a ridiculous price, then you can't do it. So, but I think putting a question bank in to some of these things would help, because it helps you reinforce what you've learned. And if the goal of this is to sort of be like a layer on top of CFA, that layer that gets you from the textbook to the real world, then there should be something also a little more rigorous. How high is it on my list for the whole thing? I don't know, because there's so much I can do, right? That I wonder, well, if I take 3 months to write questions, what am I not doing, and how many people will use them? I don't know. There's a lot of work there that needs to be done, and I am now actively looking for talent to come in, but that's not easy to find either. I don't know. I think it is easy to watch the videos and fool yourself into thinking you know it, but the tests do a great job at reinforcing the concepts and revealing what you actually know. I think you're right. I think you're right on that. I've already started the process of turning some of these sectors into written chapters. And as they're being written, those ones I will write questions for, because you have some content, some material that's written down that you can then, as you write questions, you think, okay, I should go up. As you write questions, you find ways to re-edit the writings. It co-evolves together. It's not true that nobody, okay, right, okay. Just started your financial modeling section in the applied series. It's awesome. Could I suggest perhaps a quarterly deep dive into companies selected by members where you use your existing modeling framework to build out assumptions, revenue, and cost estimates? Well, I did that for Costco. They did report their earnings on Thursday. So if you look at this Monday's release, we did the cost schedule. And then I think it's about, it's another 30 to 45-minute video looking at their results and then revisiting our assumptions. I go through the call, I make notes, I go through the call, we go through the Q&A, and we look at what the answers were. And then we ask ourselves, okay, does this change anything? And we did change a few things. We changed our baseline for the number of new store openings for 2026, because management said it's going to be 26 stores. So, 2025, because they said it's going to be 26 stores. Why would we model a base case that's 27 if they say 26? So we have done that. Putting my entrepreneur's hat on, you could break out each company deep dive as a standalone product and build out a library for those for reoccurring revenue. My guess is you're looking to create a designation of sorts that creates gravitas for holders. Elon, I've attained the applied level of financial modeling badge for Tesla and GM. You could really use me. Yeah. I know where you're going with that. I have thought about that. And that is the direction that I have been leaning in, is to do more of these companies and then to group them so that maybe you did 4 or 5 automakers, and every quarter you would update, you would update them. It's a lot of work. You need a team for that. You need good people and you need a team. That is not as easy as what you think. Ask any entrepreneur building a business, how easy is it to build your team? Wickedly hard to do. What did it mean to head to the zero line? 0%, the Fed going down to 0% on the overnight rate, the zero line. Can you elaborate on, we have a technologically deflationary backdrop to the economy? Sure. Technology makes things cheaper. That's all it means, is technology makes it cheaper. Look at YouTube. Let's go back to 1990. There was no internet, there was no YouTube, and let's say I was going to do a CFA training. I'd have to have a classroom and people come to the classroom. I'd have to be associated with the university or something and people have to come to the classroom. Or I'd have to travel from city to city to city to city to city and have some kind of meeting center or conference center set up where everybody would show up at these places. But with YouTube, what did I do? I put all the videos on YouTube. I never once left my house. And thousands. And then I set up a website. I never once left my house, right? I didn't travel to any city, didn't have to go to a university, didn't have to do anything, didn't have to invest in any building, any physical infrastructure, nothing. I just used YouTube. How cheap was that to do? Now let's imagine there was no YouTube and I had to replicate that. How expensive would it be? How much would you have had to pay to attend a course that I was doing? But YouTube was free because it didn't cost me anything for investment other than my time. It was free. That could never have happened in 1990. You would have paid a fortune in 1990, but then you get it for free later on. Look at the price of my CFA products versus what other companies are charging that started in an era before technology and have been slow to adopt the technology. I started with technology. So my prices were always low because my costs were low. So they should be low. Technology is deflationary. The first plasma TV in the 1990s was $15,000. I remember seeing it at a trade show. That's plasma. Now you're getting OLED TVs for $15.99. Not $15,000. And OLED back then didn't even exist. And if it did, it would have been $50,000, $60,000. Prices only come down. You may say, but cars go up in price. Let's be careful here. Look at the technology in the car today and imagine that technology in the car in the mid-90s. For that level of sophistication, you would have paid hundreds of thousands of dollars. It would have been a prototype car. There's no way you would have been able to afford a car with that kind of technology, but look at it today. We look at these robo-taxis, these purposely built robo-taxis being built. They're a couple $100,000 each. In 20 years, they'll be $20,000 each. The cameras will be super cheap. The LiDAR will be super cheap. The network will be so advanced. Look at your cell phone and your data plans and how much data you have today. Try to pay for that data 20 years ago. How much would you have paid? A brutal amount of money. And look at it now. I have $65 Canadian in my house in Fonthill in Canada, and I have 3 gigabyte down and up. 10 years ago, first of all, it didn't exist 10 years ago, but if it did, it would not have been $65. It would have been hundreds of dollars for that kind of speed. Hundreds of dollars. It's only 65. Fast forward 5-6 years, I bet you that thing, $30, $20, prices only go down. Right? Between CFA lessons, everything you are doing in applied series and your own investments, how do you keep track of your notes? Just a bunch of notebooks, or you have a clever system? I have two things. I have a notebook and I have sheets of paper. Whenever I start a new project or a new something, I write on sheets of paper, and then once I transfer all of those notes to my screens for my video, I no longer need the sheets of paper, and my notes are all on my screens. So they're all in folders, so I can go to understanding electric utilities. I could see all the screenshots I've taken. I could see all of my notes because they're now part of the screens I used for the video. And then I make the video, and there I am. Everything I said is in that video. So if I need to review, I could just listen to that video again or print out a transcript from the video. So I don't really keep track of notes. Starting to get me more passionate about markets. One question I would like to ask you regards a personal difficulty I have. What would be the most efficient learning process you would, again, I can't answer that for you. Would it make sense to start from a macro level and based on that, start to form expectations on the different sectors and companies based on their sensitivities to different economic cycles? It depends on how you think. I know that you hear my answers, you think, okay, just answer the question. I am answering the question the best way I can. I cannot answer that for you. Only you can answer that for yourself. I don't think that there is one better way to do it. I get a lot out of learning about a company. And in learning about the company and reading the 10K, it will tell me what its seasonality is. It will tell me what the competition is. It'll tell me what its expectations for the industry are. I get a lot out of that already. I don't know that I would learn one than the other as much as be open to both. Bounce back and forth. I do. Because I don't know it all in macro and I don't know it all in micro. So I go back and forth. I use them both. I don't feel that I had to know one before I knew the other. But then again, that's me, right? That works for me. It may not be the way that you like to do things. Experiment. That, you're not going to know what's good for you unless you experiment. So experiment. I notice you conflate successful people with wealthy people. I don't conflate. I put the cause before the effect. Okay? I don't conflate. And while they're obviously related, and wealth is a sign of success, I think reality is a lot more nuanced. No, it's not. Then wealth equals success and vice versa. Nope. There are very few non-successful wealthy people. You have to win a lottery, or you have to inherit without having been actively involved in the generation of that family wealth. So if you inherit your family's business, but you're the vice president of operations and you've been doing it for 10 years, you've actively engaged in the generation of the very wealth you're getting. You have to be a non-interested family business member who inherits money or win a lottery. That is the small part of wealth. The vast majority of wealth is created by successful people. By far created by successful people. So, no, I'm not conflating. It's success comes and money follows. If you take the top 10% of income earners, they're all successful people. Not a single lottery winner in there, not a single inheritance in there, because I said income. The top 10% of incomes are all successful people. If you take the top 10% of wealth, if 0.1% of those people fall into this group, I think that would be about it. The majority of it is created by the very people who are doing it. These are successful people. They are successful people. Period. Period. It's like saying, if you see an overweight person, you can blame their diet. That is generally true unless you have a thyroid problem, but it is not the majority of fat people who have a thyroid problem. It is the minority, a very, very small minority that are heavy because of thyroid issues. The vast majority, 99% of people who are overweight have a terrible diet. You can blame it directly on the choices they make in the grocery store. And wealth is the same way. When you see very successful athletes, you don't say, oh, well, hold on a second though. You won that in a lottery. No, they worked for it. That is success, pure and simple. It's success. It just seems that whenever we come to money, for some reason, we're perfectly fine abandoning all effort at getting it and attributing the majority of it to luck and inheritance and lotteries, and that's just not the case. It is not the case. I don't know a single lottery winner. I know they exist, but I don't know one. But I know a lot of wealthy people, and let me tell you, they work for it. In my entire neighborhood, I've got dentists, veterinarians, doctors, entrepreneurs in my entire neighborhood. I don't have somebody, they won the lottery, they inherited their money over there, they got their money as a gift over there. I don't know. There's nobody in my neighborhood that I can say that. Everybody I know in that neighborhood is something. Self-made is something. Everyone I know is something. So, no, it is a small, tiny, tiny group that may be wealthy by circumstance. The vast majority is success. It is success. Much as the vast majority of people who are overweight is due to personal choice. Curious about how the long end and short end of the yield curve react differently when interest rates change. Can you explain a bit? The short end of the curve will follow the overnight rate. So there's money market, there's capital market. So this is your 1 month, 2 month, 3 month, 4 month, 6 month, 1 year. And if the Fed sets the overnight rate here, this curve will tend to look like this. If the Fed sets the overnight rate here, this curve will tend to look like this. If it's over here, this curve will look like this. And then the long end of the curve will do its own thing depending on how it feels, but it will, it'll be based on where the money market curve is. It's not going to depart too far from it, but it'll do its own thing based on the future, based on inflation expectations, based on the supply of debt, based on what maturity premium the market feels it needs. I saw you use the synthetic on duration in your recent position. From what you said before, I assume you only go for synthetic when you feel the stakes are pretty high. If you had to break down the risks associated with that bet, what would that be? Use a synthetic when you don't want the dividend as income. You're using it as a capital gain. When you don't want to put out that much money and you don't want the currency effect, there's a whole bunch of reasons why you would use a synthetic. The biggest among them is leverage. I don't know if I'd say the stakes had to be pretty high. The risks associated with that, well, the risk is I'm wrong. I mean, that's the big risk, right? The risk is that you're wrong. And that the long end of the curve doesn't actually go down as rates go down and stays right where it is, or in fact, as rates go down, here's the long end. Well, let's see if we can do it better. It looks like this right now. It says rates go down, that you end up with a very steep curve that looks like that. So the risk is always that you're just wrong. I don't know about rate cuts duration. I don't know what that means. What would that be? Break down the risks. Well, it's just the risk that I'm wrong. I don't know, because it's such a pure trade. You're betting on a yield. There is nothing else in there but the yield curve and yields on the long end of the curve. It's as pure as you can get. So the only risk is that yields don't drop, that you're wrong. Recent live market Q&A, you mentioned being in banking makes sense that the Fed's rate cut results in lower borrowing costs for banks. Their funding cost drops immediately. Yes. Yeah. You also mentioned TLT will likely increase in value in the future as the Fed will have to do QE. Yeah. I'm trying to piece together these two arguments to justify whether investing in banking makes sense. If both arguments exist, would the benefits for banking for lower money market rates be offset by lower rates in the long run? Well, the bank doesn't borrow and lend at government rates. It borrows and lends based on the creditworthiness of the borrower. And the bank does not lend money to a business for 10 years at the government rate. It has its own rate. So the bank engineers its own yield curve, and it's usually a spread above some, if it's based on some kind of benchmark rate, it would be some spread above some existing rate. Or a floating rate plus so many points based on your credit risk. So it's the spread between what they lend at and what they borrow at. So if you had short rates at 5% and they're lending at 7%, or you had short rates at 2% and they're lending at 4%, or short rates at 0% and they're lending at 2%, it's the same spread, right? So it's the spread between the rates, not necessarily the rates. And they're not lending money. Well, they do lend money to the government because they hold bonds, but for the most part, when they lend money to a business, the business is not the government. They don't lend at the 10-year rate. They don't make a 10-year loan at the 10-year rate to a business. A business, that's the government. Business is not a government, right? How an intramarket carry? Already did that. Logic of your Tesla short. Overall, it seems you're aware of how the stock price moves illogically. Yep. You believe your logical fundamental analysis will ultimately dictate the price. The fundamentals always show up. Aren't there easier fights to win out there? Yeah, I think you're right. I think there are easier fights to win. But I'm in this fight now, and I still have some punches in me. Even though I've taken quite a few body blows, I'm still standing. Financial modeling of a bank. MicroStrategy, nope. Looking at U.S. debt, do you think it's time to make Dave Ramsey the president? I'm not familiar with Dave Ramsey other than have heard his name a few times, but I've never listened to the guy. $6 trillion of money market funds. He left us hanging. Clearly there is a disconnect. At least some of the money will find its way into duration or risk assets. Some. That's the point. The excess liquidity will need to find a home as rates go lower. Some, I agree. But when you hear somebody say there's $6.4 trillion on the sideline, slap them in the face. Because what they're inherently saying is that if that money wasn't on the sidelines and in the game, money market funds would have zero assets under management. That has never once occurred. Even in raging bull markets, money market funds have assets under management. So you can't say there's $6.4 trillion on the sidelines. That implies that all of that money belongs somewhere else, and that the true assets under management would be zero. It's a stupid statement to make. To say there's money on the sidelines, yeah, go ahead and say there's money on the sidelines, but also saying we're not sure whether, how much belongs to the bond market or equity market, but some of it must belong to the equity market. When will that come out? Well, market's been hitting all-time high, and it's still sitting there? After all-time high, it's still sitting there, and we still think some of it belongs to the equity market, and we're just waiting for it to spill out? What does it spill out on the 47th all-time high? The 48th? Which one? That's why I say every week when I see the balance go up, I go, this is curious. You got a market hitting all-time highs, you got the Fed lowering rates, you got duration performing. What do you need safety for? I'm curious as to why there's $6.4 trillion. And what do you need safety for? Right? So there is some money that wants safety. Why? I don't know. But not 100% of money in money market funds is waiting to go somewhere. Quite a lot of that money belongs in the money market. It is home already. So there isn't $6.4 trillion on the sideline. There's some money on the sidelines. How's that? CrowdStrike with Palantir. Do you have a target price for risk reversal on ABR? Not really. But as we start getting into November, because these are Januaries, the Theta will start to work against the gain that's already in there. So I may think about taking profit on it and turning it into short puts at $15 instead, because it is quite, it is making money, but I'll let it run for a bit. BlackBerry would be interesting for cybersecurity. All of your content is appreciated. Your applied level has been the best investment. Realize nice gain on Killam and cap rate. Yeah, it was, both of those performed very nicely, didn't they? CrowdStrike. Japan carry trade rather than investing in U.S. long end. Wouldn't take on duration at the long end. Lead to falling price. Okay, I already answered that. Starting out my career making $12,000 in India. Would you buy an iPhone even if you don't need it? Or would you just invest if I don't need it? If I don't need it, I wouldn't buy it. If I don't need it. You said you should not buy Starbucks or shoes as you're taking money from the future. But by that logic, I can say I should not go out to eat or on dates. I will take money from the future. No, I didn't quite say it that way. Live your life. Live your life, but understand the value of money and understand the time value of money and make proper decisions. Every time you buy a $5 coffee, you're borrowing, what did it come to? Something like $300 from your future self. And is that $5 coffee in 6 months? Will you look back on that and say, I don't regret that $5 coffee at all? Take the girl out. Go to the clubs, hang out with your friends, go to concerts, enjoy, live your life, but just think about what you spend money on. If you've got 15 pairs of shoes, do you really need the 16th pair of shoe? Or are you buying it because you want other people to see you with it? Because it's important that you impress other people that you got something. Right? Like, why are you spending money? It's just a way of thinking about making a decision about, should I buy this or not? Just think about what you're giving up for your future. I see no reason to be buying $5 coffees. I just see no reason for it, especially if you're doing it twice a day, every day, 5 days a week. I see no reason for that. That to me seems like a stupid waste of money. But I don't think that you should make every single decision like that. Okay, here's who did make every decision like that: Warren Buffett. If you read his biography, he was frugal, he was careful, every extra penny he had went into markets. It was his passion, it was his everything, right? I don't want to live like a miser, I want to have fun too. Well, what I think you might want to try to separate is, when you say, I want to have fun, do you mean entertainment? Because entertainment's expensive. Do you want to entertain yourself? Entertainment's going to cost a lot of money. But fun, I have fun every day. I don't have to spend money. I have fun every day in the markets. To me, this is the funnest thing I can do. I can't think of anything funner I'd want to do. So when you say fun, what does it mean? If you have some passion, some meaning that drives you on, that's fun. But if you want to be happy, not happy, when you say you want to have fun, to me that sounds like entertainment, because you want to be entertained. Entertainment is expensive. Happiness is free. Entertainment's expensive. So if that's what you mean, if you want to have fun through entertainment, yeah, it's expensive. But I'm not saying live like a miser. I'm just saying think about things. Just think about the expenses sometimes of what you're spending money on, and ask yourself, is it really enhancing my life? Right? 95% of us should not trade in their 20s. So when should we trade? Well, when I say 95% of you should not trade, it's because 95% of you will not educate yourself. I guess I should be clear. If the majority of my audience are CFA candidates, the majority of my audience, they're the 5%. I'd say they're even the 1% or the 2% of the people out there. The 95%, I'm talking about the broad range of people who have Robinhood accounts and who are just really just gambling. They just shouldn't be. So that's a statement about a population level statistic, not a sample. The people who are on this channel, you are a sample, and if anything, you're probably more likely to be the 5%, right? How do you decide how much stocks you should own, or do you not own stocks at all? Oh, I own stocks. My God, I own stocks. I've never once decided how much I should own. I don't do any of that mean variance optimization, strategic asset allocation crap. I don't do any of that stuff. I just, if I think something has value and it's going to go up, I buy it. Capital contribution plan, you talked about like putting $2,000 in every quarter. And you said if you are young and have a capital contribution plan, you'll be fine. What is the capital contribution plan? Well, you just described it. That's exactly what it is. It's, we'll say it the way Warren Buffett says. Most people save what they have left over after they spend. He says the right way to do it is spend what you have left over after you save. That's your contribution plan. How much are you going to contribute to your portfolio on a monthly, quarterly, yearly basis? You should listen to well-respected figures in the industry. Do you have any criteria whom you should listen to? Well, look at their bios. You know, if you look at Ed Yardini, look at his bio. He comes heavy. He's lettered up nicely. Same with Howard Marks, University of Chicago. You can't get a better place than that for economics. He's lettered up nicely. These people have gravitas, right? The 26-year-old on TikTok who's a high school graduate but a college dropout. Seriously? Screaming about, you know, some Bitcoin, some crypto you've never heard of before? No. I mean, no. Also, some people give bad advice, but they say it nicely. That's true. That's true. I think we're getting near the end of the questions here. Not near the end, but I'm running out of time. Currently waiting for level 3 results, October 17th. Still have nightmares about for the same duration. Yes. So you got to remember that. For the same duration. Good. Over the past 2.5 years, I've been managing a small portfolio for my company's cash reserves. First year, I outperformed the S&P. Second year, I underperformed. This year, I've been more or less in line. Then you are just like most active managers. Given my goal to become a portfolio manager, I really appreciate your advice on what the next step should be in terms of career path or job role if I pass level 3. I am far removed from the job market. I've said that many times. I don't know what the job market landscape looks like at all. Let's just scroll down. Yeah, I'm not going to get to all of these. I'll do a couple more and then we'll call it. Trying to calculate year-end price for ZB24 futures. Using weighted averages, target interest rate for the end of 24 is 4.234. Assuming this is perfectly priced in the futures price of 124.72. Using the CTD modified duration of 16.15, I calculate a price level of 129.43 for ZB for 4 rate cuts by the end of the year. Calculation of logic sound? I don't know. You're just telling me what your outcome it was. You're not telling me what your calculation was. You're just telling me what your outcome was. So I don't know. I don't know if it sounds. I don't know. If so, assuming we won't see 75 basis point cut over the next 2 meetings, would 130 be a good strike to sell calls on? I don't know. I don't know how you're getting to 129. I don't know what you're using. You're not showing me the calculations. You're just saying, I calculated this number. Does it sound? I don't know. I don't know. No idea. How long does it take for the far end of the yield curve to uninvert? When will you consider shorting the 20-year and going long the 30? I wouldn't. I don't know why I would do that. No, I wouldn't. I don't know that I would do that. Different durations. I don't know what I would be hoping for on that, unless I'm doing it duration neutral. But like, am I playing a steepening trade? Usually that's done between the 10 and the 30. I don't know that the 20-year offers much in there. I don't know that I would do that. As far as ZB, it's a futures contract, right? So you have to worry about the carry. You have to price out the carry, because if you're looking at what it's going to be in December, the carry will have disappeared. And since it's a financial future, its carry will be higher than whatever the spot price will be. So I think you might have missed on that. And if you're holding it to December, you might want to, it's a futures contract, right? So I don't think it's going to work the way you're calculating it. Count with IB, net liquidation, mostly engaged in selling put options and to hedge, only sell out of the money calls on SPY. It's In terms of trying to keep my risk management process simple but effective, I try to maintain a level that is close to neutral. Maintain a theta is around, okay. Have my current available funds or current access at 20%, okay. Try to keep my different long delta positions diversified, okay. Also try not to have any long options positions, okay. Am I on the right? Yeah, you check all the boxes for risk management on this one, yeah. Any thoughts on Anton Creel? Why does that name sound familiar? Oh, is this, this guy got started in, I think it was a show or something like that where they took people who didn't know how to trade and they gave them money and tried to teach them to trade, and I think he was the floor manager or something like that. And then he did a speaking tour after that. I don't know anything about Institute of Portfolio Management, but if I got the name right, I think that's who that is. How do you size for gamma? I don't. Gamma is a measure of the movement of the price of the option relative to a move in the underlying. No, that's delta. That's delta. Gamma is the rate of change of delta for a change in the underlying. You're saying it's the movement of the price of the option relative to a dollar move in the underlying. That's delta. Delta is the rate of change of the option price for a move in the underlying. Gamma is the rate of change of delta. So I don't really size gamma if I wanted to bring down my gamma risk. Gamma increases into expiration. So if you want to decrease your gamma risk, close your options out. Like have a rule of saying I'm going to close my options out 10, 9, 8 days before expiration if they're near the strike price. So if your options are still near, or if the stock price is still near the strike of your options, your gamma is going to increase significantly going into expiration. Just close out, like, if you're 10 days away and your stock price is still very close to the strike price, close it out. And that's how you can keep gamma down. Looked at Swiss CPI 1.1, always lower, true. 2008 and 22, there are only 2 prints higher than 1.1, no print higher than 1.4, plenty of time in the negative, just return to normality for them. And so is 0%, equivalent to 2% in the USA. Any ideas why it's typically so low? Not really. Probably it's not a high demand, a high consumption, a high aggregate demand or high consumption economy, much like Japan wasn't. Let's see. What are my thoughts on FCX? I don't know. It really comes down to, inventories of copper in China. If they stay where they are, then it's overdone. If you start seeing inventories wear down, that means demand has come back for it. Yeah, this is a lot left to go. I'll start at the bottom here. Maximum percentage of your portfolio you would allocate to a single stock, supposing that you've done your homework and come up with a solid buy. I try not to go more than 2%, unless it's an ETF. If it's an ETF, you can go more because now you're buying a portfolio of stocks. But if I have super, super high conviction, I'll break that rule. But I don't know that... I don't have a number that I can throw out at you. Disagree with your take on Vance. He has long championed more populist economic ideas, and Waltz, despite my disagreements with some of his policies, did implement such ideas. Vance didn't even show up for the child tax credit vote he claimed to support. I bet that Waltz would decisively outmaneuver him. Collective opposition research on Vance is too vast for him to overcome. Well, we'll find out in a few minutes here. Market is a complex system. Can you elaborate more about the fundamental idea of a complex system and how I can best study it to support my decision making? Look up complexity theory. Complex systems have attractor points, much like economies have equilibriums, and systems will oscillate around their attractor point. So any population just take, let's say, a tract of forest and there's deer in there. The deer population will grow and shrink and grow and shrink and grow and shrink, but it'll do so around its attractor point, the attractor point being the carrying capacity of its environment. But that equilibrium doesn't mean it finds a stasis and it stays in one solution. There is no solution to a complex system. There's only trade-offs. So that you would expect oscillation around an attractor point or movements around an equilibrium, but there is never an equilibrium where that's it, the job's done, we're here, we've solved the system. There is no solution for these systems, only trade-offs. They have no solution. Okay. Your opinion on Costco, I told you to ask that on the site, and you did. Yeah, okay. We're going to end it here. Sorry if I didn't get to your question, but there was like 101 comments this week. There are just way too many. And we'll end it here.